Hello, everyone. Welcome to the market opening bell for Tuesday, August 12th, your 10-minute guide to the stock market. On Monday, Hong Kong's three major indexes saw narrow fluctuations and closed with mixed results. The Hang Seng Index opened 87 points higher, briefly climbing 110 points to 24,969, but later dipped 83 points to a low of 24,775, ultimately closing up 47 points or 0.2% at 24,906. The X-share index fell 7 points less than 0.1% to 8,888, while the Hang Seng Tech Index dropped less than 1 point to 5,460. Total market turnover reached 200.9 billion Hong Kong dollars. Southbound funds recorded a net inflow of 38.34 million Hong Kong dollars into Hong Kong stocks, with net buys in Xiaomi at 562 million, Ecclesall at 305 million, Oriental Selection at 187 million, and XtalPi at 116 million. Net sales included Xpeng at 664 million, Innovent Biologics at 527 million, Tencent at 339 million, Meituan at 264 million, Alibaba at 233 million, and SMIC at 237 million. Southbound funds have net bought Xiaomi for 3 consecutive days, totaling $2.757 billion, and Ecclesall for 5 days, totaling $1.181 billion. Technically, the Hang Seng Index moved narrowly between 24,775 and 24,969, facing resistance near 25,000, where the 20-day moving average also sits. It remains in a sensitive triangular consolidation pattern with resistance at 25,100 and support at 24,500, awaiting a breakout in either direction. In the A-share market, the three major indexes opened higher and sustained gains, with the Chinex index leading with a near 2% rise. The Shanghai Composite gained 12 points or 0.3% to 3,647, hitting a new yearly high, while the Shenzhen Component rose 162 points or 1.5% to 11,291. Combined turnover in Shanghai and Shenzhen reached 1.827 trillion yuan, up 116.8 billion yuan from the prior day. The renminbi-US dollar central parity rate was lowered by 23 points to 7.1405. In the Hong Kong market, lithium stocks were in focus, with Ganfeng Lithium surging 20.9% and Tianqi Lithium rising 18.2%. This was triggered by the suspension of CATL's Jiangxiawo lithium mine in Jiangxi, which accounts for around 3% of global lithium production, due to its mining license expiring on August 9, 2025. The halt, expected to last at least 3 months, impacts smelters producing 10,000 tons of lithium carbonate monthly, around 12.5% of China's total, potentially causing a monthly supply shortfall of thousands of tons. Lithium carbonate futures jumped 8% to the price cap of 81,000 yuan per ton. The supply disruption aligns with China's efforts to curb overcapacity and tighten mining regulations, possibly easing long-term oversupply. However, limited EV demand growth and rising inventories may cap price gains unless demand accelerates significantly. If supply resumes or alternative sources emerge, the rally in lithium prices and stocks could be short-lived, so caution is advised when chasing highs. CATL noted minimal impact on its overall business and is seeking a license renewal to resume production soon. On the earnings front, Q Technology reported first half 2025 revenue of 8.831 billion yuan, up 15.1% year-on-year. Gross profit was 654 million yuan, with a margin of 7.4%, up 2.2 percentage points from 5.2%. Net profit soared 167.6% to 308 million yuan, and the board declared an interim dividend of 0.15 Hong Kong dollars per share. Tingyi's half-year report showed revenue down 2.7% to 40.092 billion yuan. Instant noodle revenue fell 2.5%, accounting for 33.6% of total revenue, with market pressures and product mix adjustments impacting results. Noodle gross margin rose 0.7 points to 27.8%, driving an 11.9% increase in attributable profit to 951 million yuan. Beverage revenue dropped 2.6%, comprising 65.7% of total revenue, with gross margin up 2.5 points to 37.7%. Beverage attributable profits grew 19.7% to 1.335 billion yuan. Group EBITDA rose 13% to 5.451 billion yuan, and attributable profit increased 20.5% to 2.271 billion yuan. Yuyuan Industrial reported first half revenue of $4.06 billion, up 1.1% year on year, but net profit fell 7.2% to $171 million, with earnings per share at 10.67 US cents. An interim dividend of $0.4 per share was maintained. Overall gross margin dropped 1.7 points to 22.6%, with manufacturing gross margin down 1.4 points to 17.7%, driven by uneven capacity utilization, suboptimal production efficiency, and rising labor costs. Companies reporting earnings today include China Unicom, Galaxy Entertainment, Tencent Music, Hong Kong Electric, WH Group, WAF Holdings, 361 Degrees, China Literature, CK Life Sciences, Honhai Precision, and MMG. The market is awaiting US inflation data, with reports indicating that President Trump will extend the deadline for China tariffs by 90 days. US stocks closed lower on Monday after fluctuating. The Dow Jones Industrial Average fell 200 points or 0.5% to 43,975. The S&P 500 dropped 16 points or 0.3% to 6,373, while the Nasdaq declined 64 points or 0.3% to 21,385. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, closed down 22 points or 0.3% at 7,480. Reports state that Nvidia and AMD have agreed to pay the US government 15% of the revenue from AI chip sales to China. Trump also reportedly approved Nvidia's sale of simplified Blackwell chips to China. Both stocks dipped slightly by 0.3%. Apple ended a three-day rally, closing down 0.8%. Tesla rose 2.9%, Meta fell 0.5%. Intel gained 3.5%, with reports that CEO will meet with Trump. Micron Technology raised its Q4 revenue and adjusted profit forecast due to strong demand for AI infrastructure chips. The company now expects quarterly revenue of $11.2 billion plus or minus $100 million, up from $10.7 billion plus or minus $300 million. Adjusted earnings per share are projected at $2.85 plus or minus $0.07 compared to the prior $2.5 plus or minus $0.15. Its stock rose about 4%. Tonight, the US July CPI data will be released. The monthly rate is forecast to rise 0.2% compared to 0.3% previously. The annual rate is expected to increase 2.8%, up from 2.7%. Core CPI is predicted to rise 0.3% monthly compared to a 0.2% previously, with the annual rate expected at 3% up from 2.9%. Our stock pick today is XtalPi Holdings, stock code 2228. XtalPi Holdings primarily engages in providing research and development solutions and services for pharmaceuticals and materials science. By leveraging an AI plus robotics model, the company has created a unique industry flywheel of high throughput experimentation, high quality data, and high intelligence models. Its robotic laboratory platform operates 24/7, rapidly accumulating high quality data used to train the group's various AI models. These models are applied in stages such as target identification, virtual screening, synthesis strategy recommendations, prediction of synthesis reaction outcomes, pattern searches, and structured data organization. The group is transforming traditional R&D approaches, driving a paradigm shift in pharmaceutical and materials development. Its models currently empowered R&D personnel in daily operations, accelerating delivery processes, overcoming bottlenecks in drug discovery and new material molecule development, and significantly expanding the explorable chemical space. The group recently announced that as of the end of June 2025, its indirectly wholly owned subsidiary, Sunshine XtalPi Technology, entered into a definitive agreement with Dovetree Medicines LLC and its affiliates. Under this agreement, the group will utilize its end-to-end AI plus robotics drug discovery platform to discover and develop small molecule and antibody drug candidates for multiple targets selected by Dovetree, primarily in oncology, immunology, and inflammatory diseases, neurological disorders, and metabolic disorders. Dovetree will gain exclusive global development and commercialization rights for these products. The group has received an upfront payment of $51 million under the agreement, with the potential for an additional $49 million in further payments, up to $5.89 billion in potential regulatory and commercial milestone payments, and royalties in the single-digit percentage range based on the product's annual net sales. Earlier, the group completed the acquisition of Liverpool Chirochem Ltc, further enhancing the capabilities of its AI plus robotics intelligent autonomous experimentation platform in chemical space exploration. This strengthens its ability to serve clients in domestic and international drug discovery, new material development, and high-value chemical sectors. Founded in 2014 at the University of Liverpool, LCC has focused on designing and synthesizing novel molecules, particularly new chiral molecules. Its PACE technology platform integrates AI software with automation, enabling virtual screening of target molecules in a chirochemical library of hundreds of millions of molecules, followed by efficient synthesis and physical testing with automated equipment. The platform serves multinational pharmaceutical companies and specialized biotech firms across the US, Europe, and Asia. Additionally, LCC has developed comprehensive technical solutions in high throughput, microscale molecular library construction, complementing the group's large scale molecular library technology. Recommendation: buy at 7.2 Hong Kong dollars, target $8, stop loss at $6.8. I do not hold the above stock.